Hi, everybody. Thank you for joining us today. I'm Taylor Combeluzier, a mining analyst here at Red Cloud Securities. Today's webinar features Canagold Resources. The company is focused on advancing its 100% owned New Polaris gold project in northwestern British Columbia. New Polaris is a past-producing operation that benefits from existing infrastructure, including 10 levels of underground workings. The project is well advanced with about 1 million ounces of indicated and inferred high-grade resources and a positive PEA outlining robust economics. The company is aiming to materially expand this resource through approximately 30,000 meters of drilling completed since 2021, and by the commencement of a feasibility study. Today, I have with me on the webinar Scott Eldridge, who's the CEO and director, as well as Troy Gill, who's the VP of Exploration at Canagold. The format of today's webinar will be comprised of two parts. The first part, Scott and Troy will provide an update on Canagold, including an overview of New Polaris and what you have to look forward to in the coming months as it executes on its development plans. In the second part, we'll take your questions live, so please submit all of your questions using the chat and we'll get to as many as we can. And I'll note you can type them in at any point throughout the webinar. To start, we'll handle the disclosures and then get into the presentation. So for Canagold, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Canagold corporate presentation located on the company's website. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Canagold specific disclosures. So with that out of the way, I'll turn it over to Scott and Troy to update you on Canagold and what you have to look forward to with the company.
Excellent. Well, Taylor, thank you for the introduction, and to the audience, thank you for listening in today. You'll have an opportunity here from myself, Scott Eldridge, CEO and Director, as well as Troy Gill, our VP of Exploration. And we'll aim to keep the presentation around 20 to 25 minutes. And then, as Taylor mentioned, we can certainly go into a Q&A towards the end. Taylor already mentioned our standard cautionary note, so I will point everyone here to our standard disclaimer, as we may be making some forward-looking statements during today's presentation. So let's start off with the investor highlights and maybe just a relatively brief history on the company. We've been public for a number of years. The company was founded by our chairman, a gentleman in the mining industry that a lot of people know of, named Brad Cook. He's also the founder of Endeavour Silver, and he's accredited with discovering the 1 million ounces high-grade deposit that we have at our flagship asset called New Polaris. And we'll spend most of our time today talking about New Polaris, which is a brownfield past-producing mine, as Taylor mentioned. And the differentiator that sets this project apart from our peers is the high-grade nature and the associated low cost of future mining at this project. So just circling back to August 2020, we had a series of corporate level changes that we collectively call the rebirth of the company. So those changes included bringing on a new director, a new VP of exploration. We had a 5-for-1 share consolidation that helped facilitate an $8 million financing. And we also changed the name of the company from CanArc to Canagold. And the name change was to essentially rebrand the company, but also to reflect the new corporate level direction that we're going in to focus on New Polaris, whereas the company had spent time and attention on other projects within Canada, the US, Mexico, and even South America in the past. So we wanted to just keep it a very clean and simple story for our shareholders, that our focus here is the New Polaris project. And again, that's where we'll spend most of our time today. So just a snapshot of our public company information. We do have 3 listings: TSX Big Board here in Canada, the OTCQB in the US, and then Frankfurt over in Germany. We have about 87 million shares outstanding. And for the last couple of months, we've traded sort of in the 35 to 40 cent range. So that puts our market cap at about $30 million. We do currently have about $2 million in the bank. And in terms of our top 6 shareholders, I'll mention briefly the Sun Valley Gold Fund, not from Canada or the US, the Sun Valley Gold Fund from Dubai. They own just under 10% of the company. And other large shareholders include Eric Sprott personally owns about 8%. The Ruffer Gold Fund out of London, England is a large shareholder. And then Brad Cook, again, our founder and chairman, and a few high net worth individuals out of the US and Europe round off our top 6 shareholders. So moving on to our management team, my background, been in the metals and mining industry now for over 12 years. I originated out of the insurance industry. In the mining space, I started off as an equity buy-side analyst. From there, I went over to the merchant banking side of the industry, and that's how I met Brad raising money for Endeavour Silver out of Europe. And I've been on the issuer side of the business now for about the last 5 years. And I've held the role of CEO with Canagold here now for just over 3 years. I was offered the opportunity by Brad to come in and lead some changes. And just a refresher on Brad's history, geologist, been in the business over 40 years, very successful mining entrepreneur, being the founder of Endeavour Silver, where he currently still serves as chairman of that company. The technical side is led by our president and COO, Gary Biles, mining engineer. Gary's a mine builder, mine operator. He's done it 4 times in his career. The most notable project on that list is Eskay Creek, where he was part of the build and then mine manager for Homestake before they were taken over. Knox Henderson recently joined us as our VP of Corporate Development, and many people know his name having spent time with Kodiak Copper as well as Great Bear. And of course, Great Bear was recently taken over by Kinross, so hats off to the team there. And then joining me today, as you know, is Troy Gill, our VP Exploration. Troy, if you want to run a bio as well, please.
Oh, sure thing. So I started out as an exploration geologist with Rio Tinto, and that sort of lends itself to a quite diverse range of commodities and environments, parts of the world for exploration. So I also do have a lot of background in the orogenic gold systems of Western Australia and over here in Canada, Ontario, Quebec, a little bit in other northern parts of Canada. So I was brought on to Canagold specifically to start working on New Polaris, a similar style of mineralization, just in a different tectonic setting over here in the west, to get the drilling up to speed, the deposit figured out, and the resource updated, and bring us on to feasibility study.
Excellent. Thank you, Troy. And then rounding off our management is Philip E., chartered accountant. He has an extensive background on the reporting side for public issuers. Moving along to the board of directors, Deepak Malhotra is our lead independent director. He's a PhD metallurgist. Martin Burion is our lead on corporate governance. He's a chartered accountant, chartered business valuationist. And then Brad and myself rounding off the board. So now that we've covered the corporate level information, let's dive into the project side of things. So we are a gold exploration and development company, as you are aware, and we do have a portfolio of gold projects within Canada and the US. We do spend 100% of our time and attention and any of the money we raise towards developing the new Polaris project. But I will briefly point out that the portfolio that we hold within Canada and the US of more grassroots level projects, we do look to option these out to other companies. And we've optioned out about 7 properties over the last few years. And what we look for when we option out a property is cash payments every year, share payments every year, minimum annual property expenditures. And we keep a royalty upside on the property. So collectively, this portfolio of option projects does pay for our corporate level G&A, which is fairly unique for a company with this stage of a development asset. So that certainly means that any money we raise goes directly in the ground to moving New Polaris forward. So a brief history on New Polaris. This is a brownfield site, so we do enjoy many benefits of being a past producer. The production took place between 38 and 51, and they were mining underground at a high grade of about 10 grams per ton, although very shallow and close to surface for an underground mine. And during the production history, they recovered approximately 250,000 ounces of gold in the form of a gold concentrate. And they would barge the concentrate out on a barge to a smelter down south in Washington. And in 1951, they unfortunately lost their barge of gold to a storm, and their gold sunk to the bottom of the Pacific Ocean. Fast forward to today, we're sitting on 1 million ounces, all NI 43-101. And Brad, our founder and chairman, when he took a look at this asset, he just recognized the opportunity of this being a mesothermal system, which is very common in the Red Lake camp of Ontario. And this had not been drilled out at depth. And Brad had the vision that there could certainly be a larger ore body at depth, perhaps with similar grade. And lo and behold, that vision absolutely stood correct. So based on our 1 million ounces, we've done a PEA on the project, run at $1,500 gold, needless to say, significantly lower than the current spot price. And the economics of the project are very, very robust. I always like to look at the after-tax numbers. We achieve an IRR of 56%, an NPV of over 300 million US, but with a capital cost of 110 million US, and a very quick after-tax payback of less than 2 years. So what differs from the past versus how we are moving the project forward is sort of twofold. The size and the scale of the project is larger than the past, but we've also taken the flow sheet to another level where we can now produce doré bars on site rather than dealing with a smelter, which literally erodes probably a quarter of the value of the project. So at these high gold prices, just like with any mineral project, if you can produce the pure metal on site, that's the way to capture these high prices. So the PEA is very robust, and we've been spending basically the last 12 months on infill drilling in preparation to start a feasibility study during the second half of this year. So let's talk a little bit more closely about where the project is located. So our management team, we're all here in Vancouver. So this is our home province, and you can see on the map there, up in the northwestern corner of BC, there's the project. We're in proximity to Juneau, the capital of Alaska. The closest town on the BC side is Atlin. And we typically, during COVID times, have accessed the project in and out through Atlin. Once you're in Atlin, it's a small fixed-wing aircraft or a helicopter ride to get to the project. We have a 20-person exploration camp, and we've been running a drill on the site for the last little while here. Well, 2 drills, and we've drilled about 30,000 meters, and we'll talk about some of those results with Troy as we move through the presentation here. We own the project 100%. There's no option, there's no JV here. It's Crown grants, which means we own the surface rights as well as the mineral rights. And just at a high level on geology, as I mentioned before, this is a mesothermal gold vein system, somewhat unique for British Columbia or Western Canada, but certainly quite common in the Red Lake camp of Ontario. So let's move along to the resource table. Our 1 million ounces right now is sort of spread 50-50 between indicated and inferred. And very important to note here is the grades. You can see the 10.8 gram per ton indicated and the 10.2 gram per ton inferred. These already have a 20% mining dilution rate factored in. So this represents head grade to the mill. So by any measurement, this is a high grade project. And the 30,000 meters of drilling that we've conducted during the last 10 to 12 months has primarily been focused on infill drilling the inferred. We just need to tighten up the drill spacings, basically from 40 meters down to 25 to galvanize the inferred and move it up to measured and indicated, because that would, of course, become the base for our proven and probable reserves come a feasibility study. But this being a mesothermal system, there's also been some pleasant surprises here along the way in terms of the down plunge extension of the main vein, in addition to on echelon or parallel veins, which we'll tell you a little bit more about here. So at this point, I'm going to pass the mic over to Troy Gill, our VP Exploration, and we'll just talk a little bit more about the drilling and geology of the project. Troy.
Right on. Thanks, Scott. Yeah, so this is just a bit of a summary slide to bring everyone up to speed on where we got to with the drill program this year. Well, actually last year and into this year. We finished up just around the end of February, completed 30,000 meters of drilling. So even the stack of core you can see behind me there in the field, there's many more of them since this photo was taken. The 2 diamond drills are still stored on site. We have an arrangement with the drill company they're going to get underway with us again this summer drilling, all things going well. We have 43 drill holes results released. We completed 54 drill holes total, so there still are some results pending, although the turnaround time on the lab, which I think everyone knows a little bit about from last year, is it's getting better. So we expect to have some more news out very soon with some of our final results. And yeah, just Scott's already alluded to it there, but just some of the more interesting things that came out of the infill drill program was intersecting some of these parallel veins, which, you don't really put it under the scope of extension to the mineralization or anything like that. It's just a bit of a bonus that tends to fall out of an infill drill program as you start to get more and more intercepts in the same area, including a great one there that we highlight, 17 grams over 8.4 meters is certainly a standout result. And I'll talk a little bit more about where they come from later, or those sort of results come from later. So on this slide, just a plan view of the drilling area from 21-22 infill drilling. And just to point out a couple of extra things on this slide. You can see to the northwest of where we were drilling, there's a cleared area over here, which is what's left of the old mine workings area. There's no infrastructure really left on the mine, just foundations of the old mill and some other parts of the mine. There are some workshops and bunkhouse type buildings that we do utilize, and the bunkhouses are part of our camp. You can see our airstrip runs along here. That's actually the old main street of the town site, which was on the mine once upon a time. It's quite handy that we can get good flights directly into camp. And then obviously the drilling area down around here. And you can see some of the old drill holes. These are all previous drilling from Canark and Canagold, the little grey X's. We've definitely concentrated down in the southern portion of some of the old drilling, and that makes sense when you think we're trying to infill some of the deeper parts of the deposit from about the 300 metre level to 600 metres below surface. We're very close to sea level on where we're located here. So when I do say, 300 metres below ground, it's very much a minus 300 type elevation as well. So you see the bright pink drill holes that are shown on this map. That's what we're going to just take a look at next. In a 3D kind of pseudo section view of the results from one of our most recent news releases. And you can see straight away, there's some really high-grade results, which are pretty typical of what we see here. This is an orogenic system, or mesothermal, as it's called, which relates to the temperature of emplacement of the mineralization more than anything. And along with that, they tend to be a little more narrow, but still high-grade results, which are quite amenable to underground mining. And you see results like up in the top corner here, where 18 grams over 4.9 meters. Our minimum mining width, it's worth keeping in mind, is 2 meters on the resource. So our average is about 3 meters. So to have a result there over roughly 5 meters downhole is a great addition to what will be to the resource as we recalculate moving forward. The background that is showing here in 3D is actually the grade shell at the 4 gram resource cutoff. So it looks fairly like it would as an ore body in the ground that we are going to mine. And you can see, there are holes in there internally that it's unavoidable at times. It's sometimes part of the process of trying to interpolate results into areas where there are less drilling, and it's these holes that we've been trying to infill with the drilling. So you can look at it in two ways. We're trying to look at parts of the deposit that are inferred, and we've targeted those, and areas where we have no information at all, we've targeted those with infill drilling. And that brings to mind areas like this, which are kind of at the edge of the resource as we know it. And we've infilled, just in the most recent results anyway, just to simplify this map. There's many more drill holes. We're just trying to show the highlight results. And you can see quite obviously in two places where we didn't have any data previously, we now have some pretty interesting results, 19.3 grams over 4.3 meters and a whopping 42.6 over, our minimum width of 2 meters. That's going to be okay. And what it's going to really do for us is to allow the resource modeling process to fill in these gaps, especially towards the end or the edges of the ore body. So that's certainly one part of the infill drill program that's doing a great job for us in terms of filling out the resource as we go ahead to feasibility. So moving along, and it's just a bit of a reminder of other things that have come out of the infill drill program. This slide goes back to a few news releases ago where we started to see these parallel veins coming together. And we've named them the C10, C9 vein. That just comes from the numbering of the C vein system as you go down to the levels, and C11 being the C-West main in the brightest yellow there. So this slide really focuses on the C9, C10 themselves, not necessarily the results in the C-West main. But some of them are very similar in their tenor for gold. So, 11 grams over 8.9 meters. There's our just a little up dip, and that's in the C9, by the way. A little up dip in the C10 is the 17.1 over 8.4 meters. These are quite substantial results that we started to see, and that's how I could then start to model the geological aspect of it out into 3D already. And we're hoping to capture those results in our next resource calculation, which we're about to launch into, and hopefully have the report out on that. If not the end of Q2, then certainly sometime into July. By then, so that's 17. That's the 11.1 grams over 17.8 meters in the C10 vein actually works out to be one of the thickest results we've seen on any of the veins, including the C-West main. So it's results like that from an infill drill program that get quite exciting heading, developing a deposit. So to step back and take a look more at the bigger picture of where this is all fitting in and where our drilling is going. Again, the drill results table here is really just to highlight the high grade nature of this deposit. Being a mesothermal style deposit, it's quite amenable to underground. Narrow vein mining is, not a problem in an underground scenario. Just looking at where it all came from, and Scott has already talked about the main discovery that we had here, the old workings of the Polaris Taku mine. You can see the stopes that are defined up in the top left of the diagram. That's what about 250,000 ounces looks like in the ground when it's been underground mined. And it was Brad's work in the early 90s, late 80s, early 90s, started to drill down dip from those old stopes and came across what we now call the C-West main. And you can see all the drilling ever since there. It hasn't quite been updated with our latest results, but it's very close to the final 30,000 meter infill drill program. There's a few extra drill holes quite deep there, and also ones that cover the C10 vein to the east side that don't really show up just yet. And then we also did some drilling much deeper down dip, about 300 meters down dip, in fact, where the drill holes went to. A couple of drill holes that already intersected some interesting looking grade and width that looked to extend the C-West main at depth. And you can see there in the light blue the idea, or at least the concept, of where the C-West main could be headed to the further we go down dip. And it might make you wonder why would we think it should go any further, and what gave us the impetus to go and drill so far down dip. here's just a comparison of the Seawest Main in amongst some of the very well-known deposits across Canada, around Red Lake and the Timmins, and also the Kirkland Lake camp. These mesothermal or orogenic style systems tend to have very long legs. They're deeply rooted, honestly, sometimes down to over 2 kilometers depth. And yet the Seawest Main, we have it defined down to only 600 meters below surface. So we think we have a long way to go with the deposit as it stands. So I'll probably hand back to you now, Scott, to continue.
Excellent, Troy. Appreciate the detail there. So given that we have a high-grade underground project, we most certainly like to brag and boast about our grade. And as is the case with most minerals, production is becoming more and more skewed to these larger open pits. So specifically in the gold space, the average grade of the industry is just over a gram. So here we sit at over 10 grams. We're 7.5 times the industry average. And we all know the proverb, grade is king. That absolutely resonates true here on New Polaris. And if we compare our grade to other mines in Canada, or even benchmark ourselves on a global basis, if this were a mine again, we'd be the 6th highest grade gold mine in Canada and the 11th highest grade gold mine in the world. Grade is one side of the coin, but what about the flip side? What about the costing side? So the all-in sustaining cost average for the industry is plus or minus $1,000. Based on our PA, our all-in sustaining cost is about $530 an ounce. So we do have that double-edged sword of high grade and low cost, which is becoming more and more rare in the gold mining space. Let's move along to the details of the PEA. So again, this was run at a $1,500 gold price. Given the high-grade nature of the project, we have a very small environmental footprint here, with the mill only being 750 tons per day. And that would allow us to produce 80,000 ounces of gold over an 8.5-year mine life, all with an upfront capital cost that is relatively modest at only $111 million US. And as we've been drilling here, and as you've heard Troy talk about, we are seeing opportunities to perhaps make this resource a little bit bigger and a little bit better. And that would have a direct knock-on effect to the production profile of the eventual feasibility study, where our goal is to deliver not 80,000 ounces a year, but tweak that a little bit higher to 100,000 ounces a year. The general audience in terms of institutional investors, analysts, potential M&A suitors, that's the one comment that we get is, can you make this project a little bit bigger? Well, based on the current drilling, the answer to that is most certainly yes. So let's move along to a peer comp. Whether you prefer to use enterprise value per resource ounce in the ground or PNAV, you will come to the same result, that we are arguably undervalued compared to our peers. Our enterprise value per resource ounce is around $20. Our PNAV is about 0.1 or even slightly less than that. So the only way that we're going to catch ground on our peers and start to recoup some of that potential value is to deliver at the project level. And that's what we have continually done over the last year with our drill results. And I would certainly encourage everyone out there, if you're not following our story, put us on your radar screen, as we will have more high-grade results coming, probably a couple of news releases within the next 30 days. So moving along to the summary, based on valuation, we certainly feel that there is upside, and we're all bullish in our stock here. We always have our eyes and ears open for new opportunities in terms of acquisitions, but we're very happy to be working here in British Columbia on a high-grade gold project that we're now advancing towards a feasibility study. And you've had an opportunity to hear about our management team, very strong team of doers with plenty of achievements behind their name. And we do have a strong cash position right now of $2 million to go and execute on our short-term plans. So we certainly thank everyone for listening. I think, Taylor, we just kept it under 30 minutes, so we can certainly turn the mic to you for any questions.
Perfect. Thank you very much, Scott and Troy, for that great presentation. So we will now turn to the Q&A portion of the webinar, and just a reminder to everybody on the line that you can submit your questions using the chat box at any time. So with that, we do have a few that have come in. maybe let's just start kind of on a high level here. We have one question, just wondering about the timeline for getting to production, and maybe you can fill in kind of the steps between now and then and kind of what you've got lined up.
Right, Taylor. Good question, and I'll try not to ramble on too long. But if we take a step back and look at the timeline of, we've done a PA, we're transitioning into fees, we're working all on the permitting, advanced relationships with all our stakeholders. Our current timeline is we feel we're approximately 2 years away from being a shovel-ready project. And that involves the permitting process as well as the feasibility study. So about 2 years from now, we'd be in a position where we would be making decisions about, do we finance this and build it ourselves? And we have very supportive shareholders that are interested in that strategy. But if we've also de-risked an asset in Canada that can show 100,000 ounces of gold production per year at a low cost, we would certainly be an M&A candidate to perhaps be taken over by a larger company as well. So, we feel that we definitely have strong optionality for our shareholders in terms of potential exits. But we are very focused on advancing the project, and we're more than willing to finance it and build it ourselves.
Great. Okay. And, just kind of picking up on something in your answer there, going straight kind of from the PA that you have now to the feasibility study, what's the process used for making that decision rather than doing a PFS in the interim, or going through that phase?
Yeah, I mean, there's a lot of information that's involved in that decision, and the typical progression of a project, as you just said, is PA, pre-fees, and then full-on fees. Given that we're a brownfield site, so there's a lot of information on the project from an engineering and from an environmental perspective. The resource is fairly strong, already being half in the indicated category. We've just finished 30,000 meters of infill drilling. We're very advanced on our environmental side. We've already completed 3 years of environmental baseline, which is the requirement to submit the environmental permit to the BC government. And also the size of the project. This isn't a $500 million or $1 billion project where you need a pre-fees. We're looking at a capital cost, probably the number will go up in the fees, call it 110 to 140 range. So there's just a number of pluses for the project that would suggest that a more aggressive timeline would eliminate the need for a pre-fees.
Okay, great. And in terms of the infrastructure, I guess the underground development rather that's in place from the historic operations, we do have a question just wondering about was the old shaft or ramp built in? And I'll leave it at that for that.
Well, I'll let Troy handle this one, but there is some benefit to the old underground mining infrastructure, but we're certainly going deeper. One thing we probably see is that the old workings could be a future vent raise, which might be a $5 million savings. But Troy, if you want to provide a little more info there.
Yeah, that's certainly the sorts of benefits we'll get from the old workings. It gives us some extra open space underground already, and you can think of that in terms of ventilation or access and secondary escape type areas, things like that. It'll also give us extra space for tailing storage, which we will be pumping tailings back underground here for this, and so things like that. Geologically, it's a fantastic asset because we've been underground many times. The mine's been dewatered twice, and lots of geological study from that. But I guess if the question's alluding to, are we going to use a shaft or a ramp, or what was the old setup? The old scenario, and maybe I should have pointed it out actually on the plan map there. There's two portals that we have access to the old workings that are above water level, Polaris and the AJ. They're not going to be used the Polaris, we're going to probably enter the mine again very near the Polaris, but this time we'll be doing it as a decline and ramp scenario, whereas previously it was just a small internal shaft, which was used to hoist ore back to the portal levels. And our workings will be a little wider, a little bigger than what the old ones were. So if that answers the question, I hope.
Yeah, I think that's a good answer there. And then just kind of on that same front with the historical mining and the resource that you have now, is the current resource entirely below the historic workings, or does it include any remnant mineralization that may not?
That's a good question, because there's been a lot of focus on the CUS main, and it's the only part we talk about recently, because that's where all of the infill drilling was focused. It's definitely the largest contributor to the resource, so there's good reason to be focusing on a better definition of the CUS main. But there are other components to it, and they are some new discoveries that all collectively make up the latest resource calculation. Everything that was drilled previously in the 90s in between the old stopes and things like that has been set aside for the moment because of issues about speaking in terms of 43101 disclosure about it. So that's a little job I need to work on, is bringing some of that data up to speed so that it can potentially be rolled back into the resource as we move towards a mine. Hopefully you'll hear more about that as we go forward.
Great. Okay. So we do have a number of questions that have come in, just wondering on the metallurgical side, whether or not you're planning to use flotation and leaching. And then we have another one, just wondering about commenting on gold recovery in more detail, such as using pressure oxidation compared to biox, and also if there's any arsenic issues, tailings, and backfill that you'd be looking at.
Right. Well, we can just look at the history of the project, and they were sort of doing standard crushing, grinding, and then producing a gold in the concentrate, which is of course flotation. So we know that works, and you can recover the gold with a high degree of confidence. But like I said earlier on, to unlock these gold prices, we want to produce doré bars on site. So we've taken the flow sheet one step further. And we've come to a conclusion with third-party consultants that biox, which is bacterial oxidation, is the right process for this particular project. And the question, I believe, asked about pressure oxidation, or just known as POX. We looked at autoclave in addition to that. And when you look at sort of the CapEx, OpEx, gold recovery rate trade-off, the ideal solution for us is biox, and it's used at about 10 gold mines around the world at a commercial scale. The most notable on that list that the audience would recognize would be Fosterville, Kirkland Lakes mine down in Australia. They use a biox plant there very successfully to produce doré bars on site, and their mineralogy is identical to ours. So we do plan to use biox as we move forward with the feasibility study.
Mm-hmm.
Okay. And then turning.
There's a second half to that question. Maybe, Troy, you want to talk about the arsenic side?
Yeah. So it's a well-known process that any sulfide-bearing concentrates, and especially arsenic, you lock up those types of elements, and we have antimony as well, are locked up into compounds that are as immobile as possible under your environmental standards. And especially for an underground mine, we have the great advantage that those sorts of tailings can be pumped underground, and in fact it's part of the mining process anyway, so there's no additional cost there. We will have some mixed dry stacked tailings at surface, and that's another benefit to try and lock up the more deleterious elements in our tailings, so that they're immobile and don't have any leaching into the environment. They're the sorts of studies actually that we're just starting to do for environmental baseline as well, more of the engineering side than simply the environmental baseline work itself. We'll have to do all that, and that's where we're in this overlap period of we're doing feasibility study level geotechnical engineering and environmental work already, well beyond a PEA or even past feasibility, pre-feasibility level as well.
Okay, great. And then turning now to the exploration side, we have a couple questions here. I'll group them together. Just wondering what your total cost per meter is drilled, and how many meters are you planning to drill this year?
So I'll start with the costs. Through summer, we were budgeted at $350 a meter, all in. That's everything from getting the drills out there in the first place, obtaining the core, logging it, taking a sample, and getting that assay back. So we're definitely not the most expensive explorer up there. That's mainly because we're not flying helicopters around with drills dangling underneath them up to high mountain peaks and passes. We're pretty much working on a coastal flat. We are flying materials in and out of camp. So as we moved into winter, things did start to get a little more expensive. With extra heating, we needed extra personnel for snow removal. It was, compared to the high altitude areas, still, it was quite easy, much easier to actually work through winter. But with the expenses per meter, we decided enough was enough. We drilled a lot of meters, 30,000 meters for the season, and that's why we eventually stopped before we got into perhaps the worst parts of winter and into breakup, where it actually becomes a lot harder to work, in fact. So that's the sort of meterage rate. So I think we're pretty efficient with our cost per meter. And then what are we looking to drill this season? I think we're hoping to do potentially up to half the program again, finishing off some of the work on the Seawest Main, and then looking at filling in a few additional gaps on other parts of the deposit.
Okay, great. And then I'll read the next question here. What is the approximate ratio of carrying costs of all the other company projects versus current cash flow from contractual agreements, and are they all performing? So I don't know if you have any comments on
that. I'll take that one. So I believe it's sort of referring to the portfolio of projects that we option out to other companies. So when we option a property, what do we look for from an optionee? Cash payments every year, share payments every year, minimum annual property expenditures, and then we retain a royalty. So when we receive shares and cash from these companies, sometimes we hold on to the shares, sometimes we sell them. We're opportunistic if we see the share price move north. So there's no sort of fixated answer to that. But last financial year, it brought over $1 million to the company.
Great, that's a nice thing to help you out there. Yeah, get some.
Yeah, it's almost a project generator type strategy, which sort of makes us a hybrid at the end of the day. But that was just never the goal. We just happened to have a lot of projects from a project that we picked up in the US that had a bunch of grassroots projects come along for the ride. And, our theory is, why let them sit there and collect us? Let somebody else go spend their time and attention and money there and create value for our shareholders.
Great. And then we have a couple questions, both came in about the same time. Just wondering about the amount of money that you'll need this year, and whether you're fully funded to kind of see you through what you have planned for this year.
Yeah, so we're sort of calculating our plans and looking at different ideas of how to finance what we want to do, which might not necessarily be dilutive to shareholders. But as Troy mentioned, we would like to do some more drilling to galvanize the resource and have a full 1 million ounces measured and indicated before diving full blown into the fees, because we want to deliver that 100,000 ounces production profile. So something in the ballpark of say $5 to $8 million is what we might look at.
Great. Okay. And then we have this is the last question that we have in so far. I'll leave it up to you. It's more a macro type of question. Just wondering if it says here, what is the thinking of the board if we find ourselves in a severe global economic downturn and growing inflationary inputs? I guess just wondering about the strategy that you'd take for the company.
That's a great question. We could probably talk for hours about that, but we're experiencing very high inflation right now. I believe in Canada, the last publication was 7.5%. In the US, it's 8.5%. But if we look at real interest rates, that's always been the background for gold to perform. When you see real interest rates somewhere between 4 and 10% for continuous quarters, and that's exactly the environment that we're in right now, which most gold bugs would argue is good for gold. But if you layer onto that, an economic downturn, that adds another layer of complexity to the question. For a gold developer, it does depend on the availability of capital, which is a function of the gold price. But we do have an asset here that would be in the lowest quartile of the cost curve. So in theory, this project, subject to being financed, would be a profitable mine compared to its three quarters of its peers. So that's definitely a tricky question. And, those are the things that we certainly have to prepare for. We don't have to put the gas pedal down and accelerate the project. We've got a million ounces that, we could certainly sit on if there was a lack of capital available. That's something that we don't necessarily want to do. But my final thought there would be that we have such a strong level of support from shareholders that have a very long-term vision for what we're doing and the gold price. We are a company that will be able to raise money no matter what the economic background looks like. It just comes down to how much do we want to raise and how much dilution does that mean to the company. But we definitely have supportive shareholders, and we definitely sleep well at night knowing that this project will be advanced.
Great. That was a nice, succinct response to a question that could, as you said, go on for quite a while. So, okay. So I think we're through pretty well all the questions that have come in. So maybe just before we wrap up, I'll let you kind of have the final word and, maybe give a final pitch to viewers and highlight maybe some of the key things to watch for.
Yeah, absolutely. So listen, we know we've taken 45 minutes of your time, and there's always lots of opportunities out there to listen to as investors. So I hope you enjoyed listening to Troy and myself, and that you'll continue to follow our future webinars and in our news releases. And in terms of upcoming catalysts, everybody wants to know what's next. Out of that 30,000 meters that we've drilled, we haven't published all those results. Visually, yes, we've seen the core, and we're quite optimistic that there will be some very high-grade, robust results to be published, as expected with this type of project. And other than that, I think we're all kind of surprised the gold price is sitting where it is. But maybe this is an opportunistic time to be buying spot gold as well as development companies such like us, if you're taking that medium to longer term view on gold and the gold mining industry.